is happening? This is Colin Andrews Egbert, and this is Beautiful, Boring Businesses. And that is the business that we are in. And today I am with Toby Bergstrom, and Toby has had quite some experience in this, specifically in the manufacturing side. And we're here to kind of go down, dig in, understand a little bit about what his mentality is when it comes to buying these businesses, how he operates them, how he improves them, and just his overall aims with it. So Toby, great to have you here.
Hey, thanks for joining me, or thanks for inviting me, rather.
Absolutely. You got it, Toby. So you actually had, based on everything that I've heard, some kind of humble beginnings as far as when it comes to manufacturing. Like you kind of started your career, working in these businesses and kind of doing the work. And then you kind of looked at it and decided like, hey, you know what? I want to actually look at purchasing these, and have had quite a career doing that. So just wanted to kind of like dig in a little bit more on that and kind of hear a little about on the background and the backstory on that.
Yeah. So actually, I started life, I guess. Well, I was born at a very young age, and then we did a bunch of stuff while I was growing up. But I actually got my investing start in real estate, not in businesses. And I was in my 6th year of my undergraduate study of engineering, not because it was a 6-year program. Well, it was for me. But I was walking home. I was just about done with my final semester, and I saw a 3-family house that was for sale. It was back when you had to memorize phone numbers if you wanted to call somebody back. There was no cell phones. You couldn't call them right then. And so I remember I just repeated that phone number over and over in my head as I was walking back to my apartment, and I called the broker, and she was explaining to me about that property that was for sale about a block and a half from where I lived. And I realized during the conversation that the first floor would pay the mortgage. The second floor would pay me, and I could live on the 3rd floor. Why doesn't everybody have one of these? And so I didn't buy that one, but it was what got me thinking that I had to buy one of those. And so I finished school, went out and got a job, and started looking for one of those investment properties. And I found one. I actually bought the building that I was living in as a sublet when the landlord came over because a water pipe broke, and he was assessing the damage before he called the insurance company. And I made him an offer, and he said, if you pay the closing costs, and I said, sure, having no idea what closing costs were. And we got that first one. Then that ended up building up a portfolio of 3-family houses that were all around that university that I went to. While I was doing that, I managed to lose 5 jobs in 2.5 years. Determined that I was unemployable, but that I made way more money from real estate than I ever got paid as an engineer. So why would I ever want a job again? I declared myself retired at 27. I call it tuna fish retired. If all I wanted was tuna fish sandwiches, I had enough money.
You had it, yeah.
And then I quickly got bored, because when you're tuna fish retired and you're 27, you don't have a lot to do. I decided I'd go to grad school since I lived right next to the university, and I went up there, and I was able to get free tuition if I picked manufacturing engineering, because I knew a guy that could get me some free credits. And so that's how I picked manufacturing as my career path, I suppose. While I was in college, I actually worked in manufacturing. I drove a forklift in a manufacturing facility for second shift so that I could pay for that last year of college. So I was working 40 hours a week and going to school full time. Then, and so I was sitting in a class I couldn't tell you what the guy was talking about. It was not that important to me, except I had an epiphany in that classroom. And it was that manufacturing makes everything that makes our society possible.
Very true.
And when I realized that, I said, I should actually double down and study this stuff. I should get good at it. And so that was my sort of moment to really get into manufacturing. I ended up getting a master's degree, getting a PhD, and becoming a professor of manufacturing, all while living my frivolous lifestyle because of my real estate investments, and then being a consultant. And I did consulting work with little startup manufacturing businesses and, Fortune 50 manufacturing companies. And the beginning, it was all technical consulting. It was all sort of engineering work. Later on, it became a mixture of engineering and business, and then mostly business kind of consulting as I worked with them. And for years, I was like, well, I know how to run a manufacturing company. In 2015, one of my best friends kept telling me, hey, you should stop investing in real estate. You should buy businesses. It was because he wanted to sell me his, and it was a small manufacturing business. And so when we started that, we said, "Hey, I've always said I know how to run these. Now we're going to find out." And so that was pretty neat. We actually moved the business to directly across the parking lot from the university where I was teaching. I did not quit my day job. I kept my day job, and I ran that business by hiring undergraduate students to go be the machine shop workers. So they would run, and I had a supply of them. I knew how to find them. I knew how to hire them. I learned early on you can't hire the ones that just know how, that just have the skills, that just know how to do it. You need to hire the ones who are super hungry and need the job, and you can teach them the skills. That was something I learned early on there. We ended up closing that business as COVID came around. There was a whole bunch of things that happened. I had some health issues. Our landlord, it turns out, was not actually paying the mortgage with the rent that we were paying him. He was keeping that money in his pocket. And so the building got sold at auction. The new owners didn't want us there. So we lost our location. I had some health issues, and then COVID happened, and the university closed and sent all the students home, and I had no employees. And so we shut down then.
Man.
I donated all the equipment to a little nonprofit, and we moved on with our lives. And as we were closing up, coming out of COVID, I said, well, I had this dream of building my manufacturing empire by growing by acquisition. And there's no time like the present. So in 2021, my wife and I together decided this is what we're going to do. And by 2023, I had left my teaching job, and we full-time run our investment company, helping business owners retire and making sure that their businesses keep operating.
Excellent. And to kind of have that transition, and first of all, I mean, that's a true testament of taking adversity and really turning it into something that's beneficial, that's really kind of set you on your current path that you're on. And speaking of that current path, what is something that can you kind of share a little bit more about the first acquisition? Like, what was it like after coming out of COVID? How did you analyze? How did you find the deal? Can you tell a little bit more about that acquisition after coming out of COVID?
Yeah. So when we came out of COVID, we had first it was about deciding what the buy box should be. Right. And all deal makers, anybody that's getting into this has to make that decision. And we looked at, well, we could do a SaaS business. In another career that I didn't mention here, I was also a software developer. Right. So we could have done a SaaS business. I spent 20 years teaching at the university level and did a lot of online learning. While I was a professor, I also owned a media production company. So we did a lot of video learning and video tools, things like that. So it was about deciding what to do. And we picked this machine shop space because CNC machining is the most prolific manufacturing process in the world. There's nothing that you can buy today that's more than 2 steps in its manufacturing process away from a CNC machine tool.
What does CNC mean, just for those that don't?
Computer numeric controlled, or just computer controlled. Yeah, so machining is just basically taking anything and making it into the shape you want by removing material. And so you can do it with a lathe where you spin the part around and you move the tool in and out. It makes axisymmetric parts. You do it in a milling machine where you can make prismatic parts. But like grinding or sanding is a special process of machining also. And there's a bunch of different ways to do it. But basically, we wanted people that were taking a thing and making it into a smaller thing that had a specific shape. It didn't really matter what the process was. And if you weren't using computer controls on your machines in today's day and age, you weren't growing and you weren't a target anyway. When I was a professor, one of the things we did is we built one of the best training programs in the world to teach people how to do computer controlled machining. So that was one of the reasons we went that direction. The manufacturing company owners will often tell you their biggest problem is the lack of a skilled workforce. It's hard to replace people when they leave, when they retire. And that never scared me because I could take Jack or Jill off the street and train them to be a machine operator in about 15 minutes. In about 8 weeks, I could get them to be a setup technician. And in a few months, they could be the programmer, assuming they had the aptitude and wanted to do it. So at any rate, we came up with that plan. We came up with the sort of the overarching design of our roll up and what we wanted to do, and then set on a quest for the platform business. And probably at the very beginning, we're too picky about which platform business to choose. We rejected a lot that would have been good acquisitions, I think. And the deal where I have a meeting after this call is that platform business. So we have not yet acquired our machine shop roll up platform business. In the meantime, I've partnered with other people and done some other acquisitions.
Gotcha. Okay, cool. So you're still looking for that first platform one. Right now, you've looked at multiple ones, and for whatever reason, they haven't worked out. Can you kind of share thousands? Yeah. What are the main
Literally
reasons for the ones? I believe it. I believe it. What are some of the reasons that you've kicked out certain deals? Like, what were the ones that maybe they could have worked, but at the end of the day, you said, I don't want to.
So I think especially in the machine shop space, I think it's pretty easy to find one that's doing $2 to $3 to $4 million in revenue and buy it, as long as you're going to be the operator. If you're going to go there and work every day and set up machines and program machines and manage the people that are doing that, those are fairly easy to buy. That wasn't our goal. I had already owned that company. I didn't want to own that company again. When we had that small machine shop, it was across the parking lot from my office at the university. And so I would go to work in the morning. I would come home, pick up my kids after school, feed my kids dinner. My wife would come home from work, and we would pass in the driveway because I would see that she was coming in the driveway, and I would be going back to the other office. And I would work all evening at the shop. I had a little bed in my office. I would sleep at the shop, listening for when the machine stopped and I had to go change a part. And then I would come home at 6 o'clock in the morning, take a shower, feed my kids, go back to work.
Got it. So it's pretty much a business that
for 4 years.
Okay. And so it's a business that you essentially, it was a job that you owned, as they call it.
You had to own a job,
very intensive,
to get a business at that level and to do it. And so we were looking for something that was larger than that came with a management team. The middle market is full of people buying these things. There's PE companies and giant roll-ups that are buying these at the, call it 2 million plus EBITDA range. Okay. So we needed to find something between 500 and like 1.5 EBITDA, where we could convince the seller that we were the right new owners, that was doing the kind of work that we wanted to be involved with. And so we were really picky. I think we found a really great platform business now, though, for this, and we've got over a dozen potential bolt-ons already ready to go and primed.
Oh, nice. Okay, so once you get this one down, do you think the other dominoes, so to say, are going to
the other dominoes
quickly afterwards?
But but again, in especially in the beginning, I was probably too picky about my platform business. I was probably too picky about retaining a high level of equity, things like that. So,
Toby, you just were speaking about that the dominoes are going to fall right after the first one goes down. So, and how is that? Like, are there, just because you have multiple ones that they're smaller, and that once you get the first platform, that's going to be a lot easier to get other ones that make sense?
So partly it's that. Partly it's that you get, as we've been through this process, we built a team. And so it's not just me. So I have a business partner who's the implementer, the integrator, so to speak. I'm the visionary. And we're part of two different roll-ups. The other roll-up, we already have the platform business, and that's in the construction industry. Okay. Which is very similar to the manufacturing industry, but not the same. So that was my integrator from the construction roll-up project.
Got it.
And so he might be the integrator, but I'm the IT guy. He had some IT questions.
Okay. Very good. Excellent. Okay. So that's kind of the goal. When you're looking at these deals, are you finding them more off market? Are you going directly to the seller, or are you finding brokers as well?
So it's really both. And we have an extensive off market outreach program. We have about 2,600 machine shops in our list that we've curated and developed. All of them have received at least one message from us in the past. Maybe not all.
Is that through direct mail, or are you doing cold outreach?
We do direct mail, email. We do not send unsolicited text messages. I draw the line there.
Got it. Yeah. it gets the gray area, right? I
But we
get it.
also, we've also run Facebook ads and done outreach there. So part of it is that we have a system. We have more than one person. When we're doing live outreach, we might have 5 people working on the project internally in our team. Part of it is that we've already got conversations opened with people who are waiting for the other deal to close so that they can become part of the thing. So that's how I know that the dominoes are going to roll up, because we've already got other businesses that are partnering with us once this one closes and everybody's aware of the situation.
Okay,
So
got it.
it's more of a it's kind of like a paper merger, but there's no paper.
Can you kind of explain for those that don't know what a paper merger is, what you mean by that?
It's where you find two companies that would complement each other and you bring them together and you get part of that deal just by bringing them together.
Got it.
I guess that's sort of a very fast and loose way to describe it, but yeah. So we've already identified bolt-on and actually merge up targets.
Got it. Okay, great. And Toby, as I think I mentioned, one of our main focuses that we're doing is matchmaking the equity partners, folks that want to bring capital, they want to understand a deal, they want to get involved, they don't want to sign their name to a loan, they don't want to deal with the day-to-day operations. For somebody like that that's watching this right now, what would you say, just now that you've analyzed lots of deals, if they're interested in becoming an investor, what would you say are some things that they should really look out for? They should really kind of keep an eye out when they're looking at investing in a business as a minority partner.
Understand who the operator is. And this is also key when you're talking to sellers. So one of the things that we've adapted through our approach over the last years is we won't go to the seller meeting unless we can tell the seller who's going to physically operate the business. Most of these Main Street deals are not owned by an owner investor. Most of them are owned by someone who runs the business all day long, goes to work every day. And even if it's possible for you to operate it as an owner investor, to put somebody in place and not have to be there, even if that's possible for you to do, they haven't figured out how to do it themselves. So they won't believe you can do it, regardless of your ability to do it. So
Okay.
having identified who that operator was, in some deals, I'll let them believe I'm going to go there and run the business. It's pretty rare that I have to do that now because we've got this program where when we get a good prospective deal, I was Facebook messaging with a guy yesterday. I said, hey, do you want to move to Houston to run a machine shop? He currently runs a machine shop in Denver, but he doesn't own it. He's a general manager.
Okay.
So does he want to move to Houston and go be an owner and run the machine shop?
Okay. And this is for the platform business that you're looking at and
No,
you're
it's different
kind of putting
business.
together the team. Oh, this is something different. Okay.
Yeah.
This would be a bolt-on then to the
Yeah,
platform.
that would be a bolt-on, yeah. That particular one would definitely be a bolt-on.
Okay. Got it.
Some of the other ones that we look at could be a standalone platform. And that's the other thing is we bought a construction company in Florida this February, so February 25. And it was with a specific partner, and the two of us were looking for a construction company to buy for over a year, and we had 4 deals under contract before one of them closed.
So they just, for whatever reason, through the
For
due
whatever
diligence,
reason,
they get
during due
kicked out.
diligence, they fall apart. One of them, the seller got a better offer while he was under LOI with us, and so he drug his feet so the LOI would expire so that he could take that other offer. Was it in violation of my LOI? Probably. Was it worth trying to collect from him? No.
No. Yep.
So
Just
that's
got to
just
move on to the next. Yep.
that's
I
just
get
sunk
it.
cost.
Totally. Yeah, I've been involved with that too.
Yeah.
I get it. So when it comes to machine shops specifically, why do we talk about buy boxes and really kind of focusing on what it is that makes sense, that you want to like dive in on, that not to be super broad. What was it that made you decide to really look at that? And for somebody that's interested in being a potential minority investor, what are some of the benefits besides like what you had mentioned at the very beginning of this conversation,
Yeah.
that everything is built, that our society is built upon manufacturers,
Manufacturing.
right? Building
Yep.
things. Exactly. So what are the other things with the actual business elements of it that you really like?
Well, so you create wealth that didn't exist before.
Can you elaborate on that?
So in construction is similar, which is why we're aligned in both construction and manufacturing. So you take a raw material, you do work on it, and you make it more valuable. So you've created value, you've added value to that part, which that value is wealth that didn't exist before. And so if you think of it in a service economy or a service business, you're trading value for value, right? I give you the value of my time in exchange for the value of your dollars. And then I go spend those dollars for the value of somebody changing my hairstyle or whatever it is, right? Or for a Big Mac, although Big Macs are manufactured.
True.
Business. But if you look at it that way, if all we do is trade wealth back and forth, those people that are really good at trading, it all ends up at the top. And you have a very big spread between the top of society and the bottom of society. In a manufacturing business, you're creating wealth that didn't exist before, and you get the people who do the work get about 50% of that wealth in their wages. So they get paid their salary, they get paid bonuses and things like that. And then they spend that money in their local community, and it makes the community stronger. And that wealth, it all rises up to the top, right? Because then all we do is trade it back and forth. It all ends up at the top, but it flows through more layers of society if you're creating it near the bottom.
So I never looked at it like that way. Yeah.
Yeah,
It's a very interesting
so
perspective.
that's
to
sort
look
of
at it.
the rationale for needing to do it. And like on my website, it says that I help business owners retire with peace of mind. But honestly, I don't care about them. They show up to the meeting in a $100,000 car, right? What I care about is their employees. Make sure their employees keep having jobs, and that their community stays strong. And I only want to deal with sellers who care about that too. They've all made their money. They're all already rich. And so there's that. But I think when you're talking about what do investors need to know and what should they look out for, if I've got a good deal and the math really works, there's always money available. So what I'm looking for is not just money, not just someone to be there, especially if I'm the originator of the deal. I have to understand that I need to be willing to give up equity. And I've consulted with some other proteges on deals where I think they were equity greedy. And I said, here's the opportunity. Let's say you only need to raise $400,000 to close the deal. You need to go out and ask for $700,000. With $700,000, because this business's intrinsic value, I think you should offer 30% to the investor for $700,000. So now you got enough to close the deal, but you also have some excess working capital. You've got some working capital to work with on top of whatever you've negotiated. And it shows the bank that you're not right at the bottom limit of what they'd be willing to accept. You've got more cash than the bank needs you to bring. It makes it easier for the bank to close. It makes it easier for you to operate because you're not right at the edge of running out of money when you start. So and they preferred to ask for, I think they needed 400 to do 10% down. Instead, they asked for 5% down. They only wanted to raise 200. They only wanted to give up 5% equity. Those kind of things.
And then the deal ends up not working out because they're too greedy, and so they get a whole 100% or 95% of nothing, right?
Right. Yeah. And so there's those kind of conversations, especially if it's your first deal, your second deal. Would you rather be part of it and learn the process with somebody else's money, even though they're going to make most of the profit? Because then you can still say, I was part of this deal.
Yeah, exactly.
I'm an owner of this company. Nobody cares what your percentage is when you say you're an owner. And so there's those things. I think the other thing is the seller staying involved as an investor? So if the seller is willing to roll equity in the deal, that means that they believe in the new people coming in. Because they're willing to tie up some part of their expected earnings or their expected
value, right?
Windfall in whether or not you're operating the business. And so we like to have the seller hold a 10% seller note and roll 10% equity.
Got it. And that really shows a good indicator that this isn't just a business that they're trying to offload and that there's a lot of issues with it that are going to be found out later. They're saying, hey, we're willing to stick with you as we
And
go
then if I
throughout
bring
it.
10%, when we go to the bank, we've got 70% equity, as opposed to, trying to get 5% equity.
Mm-hmm.
Just because SBA rules allow it doesn't mean the banks like it.
Yeah, right. So you might as well just get more than what's actually needed, have some buffer, and go from there. That makes sense. Toby, I wanted to kind of go back to what you had originally started talking about, which was real estate. And that's what my background is as well. Over the last 4 years, I've been focused with self-storage investing, and I've really kind of made the decision to focus more on businesses as opposed to real estate, even though that self-storage is it is a business within the real estate, right? But it's still considered real estate when it comes to the banks and such. And so I'm curious, what was your reason for deciding to kind of focus? You did well with real estate, but to focus on the businesses and acquisitions, not just startups either, but the acquiring of businesses. What made you decide that after you had a good amount of success with the real estate piece?
Well, actually, I use that kind of a discussion as a tool when I'm talking to sellers. I'll just say, well, if all I wanted was more money for me and my family, we'd just stay in real estate. And the reason that I'm buying your business is because I care about your employees, because I care about your community, and because I want your business to continue to thrive. Because I am only interested in dealing with those highly legacy-minded sellers. In the first conversation I have with a seller, or at least the second conversation, I'll say something to the effect of, if all you care about is money, I'm not your buyer. If you care about your people and your business and your customers and the community, then we can figure out a way. But there are buyers who will pay more for your business than me. And, a trade buyer will always be able to pay more than me because they're going to have more cash. So even if they're borrowing money, they won't need to borrow as much. Therefore, they could pay more, but they probably don't care about your business. They probably want your top 2 employees and maybe that new machine you just bought. And your customer list.
Right.
And then I without naming the protege group, I throw us under the bus too. Yeah, I say, and then there's financial buyers, and there's people that have been out there and they've taken a course on the internet. And they think they're going to be able to buy your business, do some financial accounting magic, and make it seem more profitable and flip it to somebody else. And I know that's not what we teach directly in Protege, but there's plenty of people out there teaching that.
Totally.
And those buyers tend to fail in manufacturing businesses. Family offices that have never been involved in manufacturing and have plenty of capital fail in manufacturing businesses. Because it takes a special person to run that machine shop. And all of the sellers that I talk to have a friend who sold to some PE firm or some home office or somebody, and they ran the business into the ground.
Those stories are real.
Those stories are real, and I don't have to make those up or share them, because the sellers tell me the story about the guy they know. Every time that we bring that up. So they've seen it. I just have to hint at it. And I said, that's not us. We are a person just like you. And we're partnering with John over here. John is, I'm the guy that's got experience doing acquisitions. John is the guy that has experience running machine shops. John and I are partners. John's going to run day-to-day operations. I'm going to help him grow and help him scale.
Got it. Excellent. Well, Toby, thank you very much for sharing everything that you did. And if you're listening to this and you're looking at investing, we have investor partners that we work with, and then we have deal makers, deal partners that we work with that have experience, have background, and what we'd like to do is put the two together. So if you're watching this, first, I want to commend you for taking the time to learn and to invest in your future with learning about different ways that you can earn equity, earn experience by having a front row seat in a new business. And as what Toby said earlier, whether you have 3% of a company or 100% of a company, you are an owner. And that's what we're looking to do, is allow folks to get into ownership of a boring business in the fastest, easiest, and safest way. So thanks again, Toby. Appreciate it. And
thanks for having me.
Everyone else, you got it. And until we talk again, goodbye.